Hi, fellow house hunters. Today I want to dive into the topic of bridge loans. They can be a great tool for home buyers. So picture this, you found your dream home. It has a sparkling pool, the perfect porch swing, but the only catch is you haven't quite sold your current place yet. You have two options. Number one, you can put in a contingent offer, meaning it's contingent upon you selling your current home before you close on the new home. However, that can be really hard to get approved when you're competing against multiple offers. It does not put you in the most opportune position. Now, the second option is a non-contingent offer, in which case a bridge loan may be the right fit for you. A bridge loan is going to make it possible to put in a non-contingent offer on a new home before selling your current home. So think of it like a magical finance bridge. It helps you cross over from your old home to your new home without getting stuck in a financial limbo. So how does it work? A bridge loan is essentially a short-term loan that's going to allow you to use the equity from your current home to buy a new property without selling your current property. And essentially they combine the two mortgages. A lot of times they're going to want to see an 80% loan to value out of the two mortgages, which I can discuss with you on the side. They're going to take what you currently owe and what you're going to carry with a new mortgage, and they want it at like 80%. So you have to have some equity. So again, it's a short-term loan, generally a 6-month to a year type of loan, meaning they're going to give you about 6 months once you purchase the new property to sell your existing home. Then you're going to refinance out of the bridge loan into a new loan. Now, the question I get asked all the time is, what happens if you don't sell your property in 6 months? A lot of lenders will give you about a year, but at the end of the day, you really need to have a strong plan of action and be proactive in getting your home sold. You need to market really, really well, have your agent market really, really well. So sometimes a lender on the bridge loan will allow you to defer the payment on the new mortgage while you're trying to sell the existing home. That way you're not paying two mortgages. Most people are stressed that they're going to have to pay two mortgages because they're keeping the old property while they have their new property, but typically they will allow you to defer those payments. So that's a huge blessing. But again, you're going to need to at least have 20% equity, and they're going to want to see good credit. They're going to want to see your income. So it's a lot like qualifying for a traditional property, but the key component here, more than anything else I mentioned, is really your equity. This sounds like something you're interested in. I'm happy to put you in touch with somebody who does bridge loans to see if it's a right fit for you. Another option could be a hard money loan, which I can also discuss with you. So whether you're juggling bridge loans, relying on contingencies to keep you sane, just know that you have options. And isn't that what real estate's about, right? It's finding the perfect home on your terms, sometimes with a little help. So I hope this was helpful. I'm Angela Arquella, Great Texas Homes. Until next time, happy house hunting.